If everything is okay on Wall Street, why is the White House begging for more rate cuts? What's up, everybody? Welcome aboard to Bubba's Bottom Line in March Madness, or is it Market Madness? And of course, some pretty good games. And if you're a gambler, you might have suffered one of the worst bad beats in history. Virginia covering the spread against Purdue, but hey, that's why they call it gambling. In the meantime, here we are, and supposedly markets are doing great, and supposedly the economy is doing great, and supposedly everything is hunky-dory. In the meantime, the debt clock keeps rolling and rolling. The global economy is collapsing. And here we are, the White House clamoring for lower rates, wanting the Fed to not only not hike rates, but to cut rates. Now, again, I'm not a big fan of the rate cutting system. Of course, I'm not a big fan of the Fed. I think the Fed should be abolished and done with because they're basically, in my opinion, they're a worthless organization that doesn't know anything how to do but how to print free money and create more debt and really only allow the very few to really benefit from all these ridiculous policies like stock buybacks and like you getting cheap money so you can work and make bigger margins. Again, I think that we should always consider and should be going into what the free markets decide. And I think, isn't this the battle we are having with tariffs and other things throughout the country and the world, is to let the free markets decide what the prices should be instead of having government intervention. So I'm not a big fan. You know, I'm a big fan of the president, but I'm not a big fan of this new, pressuring the Fed to try to cut rates. And of course, the Fed itself is a total joke. And to begin with, when you look at, again, you cannot run a real business, which the United States of America is a real business, or an economy based on theory. It doesn't work, okay? It shows you how lost they really are because of what they're saying. And of course, are we going into a possible recession? Certainly, I think there's a lot of signs that we're already starting the recession. Now, of course, we know that our economists will not identify if this is indeed a recession, which it looks like it's going to be. They won't identify it for 10 years, and they'll come back and say, oh yeah, in 2019 you had a recession. In the meantime, there are lots of things to be concerned about. We've got, troubles with housing, okay? Now, when you think about what's going on in the housing market, okay, again, we've got some weaker sales going on, but when you look at the big picture with the reduction of interest rates, with how low we really are, and we're still not seeing or the ability for people to get into homes at these really lower rates. What would they do if interest rates were 10%, okay, or even 6%? So again, to me, that is a sign of problems that are out there that are starting to emerge that we continue to ignore. And I think that's when you look at markets in general, okay, when they want to go higher, they will continue to ignore these bad news. And then all of a sudden, one day they'll wake up and they'll say, maybe the news isn't so good. So again, I know that we've got rising wages and we've got some things happening are good. And again, it's nice to see a lot of things happening, but when you continue to hear the no inflation discussion, okay, I think that's a crock, right? Maybe you don't know, but the way that these numbers are calculated, okay, from the government is based on, buying a big long-term stuff that you buy every 10 or 15 years, washing machines, dryers, refrigerators, things like that. But the true effect of inflation, again, in my opinion, is your day-to-day expenses, okay? So with gas now up about 30% from the beginning of the year, with food costs rising, even though somehow the commodities that produce those foods are getting clobbered, okay? But with prices going higher just about everywhere of things we do use every day, but of course their surveys they're always X food and energy. Well, I don't know about you, but I use food and energy every single day. So for them to consider to continue to take that out of the equation is kind of a joke, okay? We are now entering the first quarter of earnings, and I believe that JP Morgan and the banks will once again kick it off a week from Friday, most likely. We've got the jobs number this Friday. I do not expect to have a very good earnings season here. I believe that last week, okay, which finished on Friday, end of the week, end of the month, end of the quarter, with a pretty good rally, but basically kept us in the same torturous consolidation range that we've been watching for months now. But again, I don't see a great earnings quarter coming. I would think there's going to be some trouble out there, okay? Now, again, I am not predicting that the markets are going to go lower because that's not what I do. I'm going to tell you the straight-up story, which I've told you almost every week this year. We're still long, okay? And we're not getting out right now, all right? Again, I may think one thing, but certainly I am not going to fight the numbers, and I think that is one of the big things that traders and investors do is they try to fight what's actually right in front of them, okay? But again, we've got a lot of things going on here that need to be resolved. And the question is, will they ever truly be resolved? And the answer is probably no. In the current state of government, in the current state of what we do, how we vote, first of all, most people are lazy and they don't want to vote, and they just want to go along. Okay, so now you've got the Fed taking advantage and really stripping the middle class of their capital while giving it to the very wealthy. Okay, but more importantly, okay, you've got you've got these ridiculous policies that are just continuing to overconsume the amount of debt that we're creating. Okay, there's got to be changes. We've got to change the benefit system. We've got to change the welfare system. We've got to change the Social Security system. And again, in Social Security for sure, the age needs to be raised. Okay, there is no way that with the debt that we're creating, just trying to pay off everybody. So again, we continue to see the same old mistakes made over and over again because, of course, the politicians want to get elected. Okay. And this is again where the whole term limit and things need to come into play when we look at these things. But you're watching the Treasury bonds, okay, and you're watching the 10-year now getting down. We were just at 320, now we're at about 240, 230. You've got the yield curve inverting, okay, and the very short-term rates, and of course this is creating a mess. And of course we continue to want to talk about that this time is different and it's not the same. Well, again, if you listen to the media, okay, they're always going to lean to try to be bullish the markets, okay? And it's funny how, as you watch that potential Lyft IPO come out on Friday, and they were pricing it, and I was listening to some of the different networks trying to talk about how this whole thing works, and they're trying to get a price. And what they really didn't mention is the simplest thing of how they priced it out, which is a simple factor called price discovery. Okay, price discovery is how prices are found. Okay, and what happens in a market like a Lyft, okay, is they had the IPO price, which I think was 72. Okay, but you had it oversubscribed, which brought in some bidders. You had some sellers that were well above, and what happens is they start to narrow in. They start to come back, and finally they found a price of equilibrium, a place and a price where the exchange of wealth would take place, which was at about $86. Okay, that's where the buyers and sellers met. It is called price discovery. So for all you anchors out there and you pundits who couldn't figure it out, that's the word you need, price discovery. That's how markets work. You discover price where a buyer and seller can meet. Okay, in the meantime, that was about the greatest short of all time, because what we're seeing in the IPO market, although we're seeing more of them now, which is fine. Again, I'm not against capitalism. I'm not against big stuff happening. I'm not against crazy pricing. But what's happened now, from the IPO market, you remember from 20 years ago, from the 90s, from the crazy where you buy them and they immediately go up $1 billion, and then you make your money to get out. That's no longer the case. Again, with the flow of information, with the way markets now function now, you had a lot of people chase in because they had the fear of missing out. And of course, the stock did sell off. Now they'll say that the stock was up $8 on the day or whatever, it ended up being up on the day. But the truth of the matter is, for any normal person who could have bought it, it was down. Okay? Just like almost every other IPO we've seen over the last 5 to 10 years, is typically they get well overpriced into the market and then they sell off. Okay? And then you'll see whether or not the company is really viable. I mean, we've seen over the last few years, Blue Apron, which was not viable, which is basically underwater. Snap, which has had a recovery, but is really crap, okay, unless Facebook just falls totally apart. So when you watch it again, it just goes back to the simple thing of price discovery, where asset classes will price themselves very much like interest rates would do if they would just quit getting involved in if we wouldn't have all this interference into the markets. Of course, you've got the same problem because we could eliminate a dramatic amount of this debt if they would just legalize marijuana throughout the country, okay, and then just build the tax base from there. But that would be too simple, okay? And again, the lobbyists and the politicians, nobody would get all their payoffs they want to get and line their pockets, okay? This is the same thing with marijuana and gambling, okay? Gambling is legal in 50 states right now based on the Supreme Court. But of course, the states are trying to take all the money away so that the bookshops can't make any money. Well, they're not going to agree to that. The bookmakers work on a small percentage to begin with. So again, we've got people that have no clue trying to make rules for the smartest people in the world who run these operations. So if they would just legalize it all, they could put a moderate tax on, which everybody would be willing to pay. Okay, but of course you can't because you've got too many pockets, too many hands out trying to get into your pockets and take your money and not allow you to make a living. It's the same as what they're trying to do in the trading world right now. They're trying to charge more transaction fees. Okay, real traders don't make all that much in any one trade. And you start adding more transaction fees, you're not going to make any money. Okay, so again, you're trying to destroy the free market, which is counter to everything that we know, that is counter to how the capitalistic system is designed and meant to make, okay? It's as simple as a flea market. I think the flea markets are probably the last true, only really free markets that only depend on a buyer and seller meeting together and discovering what the right price is to go. And of course, we thought that when the Mueller report came out and we found out that there was no collusion, that it would be over. But of course, it's not over because, of course, the left is dead set on trying to impeach Donald Trump. They're still looking for it. And it's funny because I bet you if you went to that much investigation into the left side of the world, okay, you'd find so much corruption you would die. And again, I'm not blaming the left because there's plenty of corruption on the right as well. There's plenty of things that go on that we should be concerned about. The Russiagate or the Russian thing should not be one of them. Okay, that is the bigger problem that we see here. But again, you keep throwing stones at other people hoping to defer. I mean, nobody ever talks about why isn't Hillary Clinton in jail? Okay, the things she's done over the years should put her in jail, okay? Going back to when she got the money from the Board of Trade, okay? The only person in history ever to only make winning trades, okay? You don't think that was a little bit fixed and gimmicky? In the meantime, this is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out here for a break, and we'll be right back with more of Bubba's Bottom Line after the break. What's up, Paul? Hey, listen, I just did a great hedging webinar yesterday. If you'd like to get a copy of that, all you have to do is email me at bubba@bubbatrading.com. I'll be happy to send it to you. We've got a lot of good things going on. And of course, this will be the last hedging class until the fall. So if you'd like to come participate and protect your assets or protect your ass, then maybe you want to check out that webinar. I think you'll enjoy it. I think you'll see how you can learn how to create synthetic stock and do all kinds of things that nobody likes to teach you, but we teach it all to you. So if you want to check that out, just email me at bubba@bubbatrading.com. And of course, if you'd like to participate in our high school program helping us out, you can go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, of course, Todd Bubba Horowitz. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you still. And of course, markets last week tried to go down and test the bottoms, and then of course they came right back to the tops. So we remain in this torture of consolidation. Now again, this is one of the phases of the markets. For any of you who've ever been through any of my classes or who've been through anything that I do, we know that this is a torture of the markets, and that's the toughest pattern to trade because we continue to go up to the top end of the range, sell off, go to the bottom of the range. So every time you get excited that it's going to follow through, it obviously does not, and it reverses. And of course, it will break out. Now, the longer that this consolidation pattern lasts, okay, the bigger the move is going to be when it finally moves. Now, my guess is, and I said this on Fox Business on Friday afternoon, I could see a move if it breaks the upside, which it can. And again, we're still long. Now, I don't like the market, but again, I'm not going to fight the numbers, right? That's one of the things we have to learn as traders and investors, not to fight what's right in front of you. So if we do break out to the upside, I would say there's 6 to 10% of a rally coming, okay? And I think if we break to the downside, I think you're looking at 20 plus, okay? Now we can do both. We could run up and then crack. So again, I can't really I certainly wouldn't try to predict it here because again, I can give you all the reasons in the bad news of why it should go lower, and I can tell you all the reasons why it should go higher. So, which is why you're seeing a lot of this crazy consolidation. But I think one of the big takeaways from last week is oil continues to try to break to the upside. Okay, again, you've got President Trump telling OPEC that they're nuts. What the real key here is the way that they're trying to pump it up. And again, a lot of these moves appear to be more from a retail standpoint. It seems like retail investors are pushing up, that the commercials are actually sitting back on the side, waiting and almost setting up this big market meltdown that will come in crude. Okay, again, we're oversupplied in crude. That dynamic has not changed. Okay, too much supply, not as much demand, but they can give you all the numbers they want. Okay, in the meantime, and that's why markets will do what they want, and that's why we don't try to get in front of them, which is why we're waiting. Now, we were looking at the 60 level. I want to see how it trades around the 60 level because I am looking for a spot to get short. The bond futures, the 30-year bonds, they continue to go higher, which means interest rates continue to fall, which is we've seen in the inversion of the yield curve. But in the meantime, again, another market, we had a bad trade, we got out, took our bath, and we'll sit back and wait. We're looking to sell. I mean, again, I believe that interest rates are going to rise, and I think this is where we're getting closer, again, and we can't time this either, but we're getting closer for the Fed to make that major flaw, which they, again, always have done in history. So again, if you go with me and believe that the markets go up 8% year over year, which is a mathematical certainty so far, again, that can always change. We don't know that it won't change. But if you believe that, which I do, okay, then you have to also use the same logic based on what the Federal Reserve has done. They have never made the right decision at the right time when trying to exit one of their stupid programs, okay? Because again, they have no idea of what's going on around them. They live in that glass house that has all these theories that supposedly work in markets that don't. So I believe that at some point you will see not only interest rates go up, but they'll go up so fast because what will happen is you'll have a chase for money because there is a big demand for money. It's just the problem is you can't get any because of the rates, because with the short-term rates rising, it's taking away the profit margin from the banks. So certainly they're not going to give away anything. Of course, I don't know why they care because they'll get bailed out anyways, as they always do, right? Let's be honest, okay? Well, what is the best business to be in and not have to worry about going out of business? Is the banking business, because if you go broke, you got the Fed to bail you out, okay? In the meantime, grain markets, whew, man, that was ugly Friday. It really had looked like most of that bad news was already priced in. And somehow, another wonderful government agency, the USDA, I guess there's more land in this country than we thought, okay? They came up with acreage I didn't know there was that much acreage in the entire country, maybe not even the world, but they came up with these boxcar numbers, okay? Again, and of course, the traders in the street took it and everybody panicked and puked out. This may or may not be, but I'm going to call this maybe one of the buying opportunities of a lifetime in the grain markets. Now, they may go a little lower early in the week here and before they settle, but to me, they're giving it away here now. You have got these hedge funds that are pounding away here on light volume. Again, this is my opinion, but I know the hedge funds are in, and we know some of the commercial, and I think they're pounding with light volume, and basically everybody's just kind of cleared the decks, okay? And what you're going to see here, I think, is any little event that could happen. We have not had any kind of event to disrupt production in years, which is why we've got so much supply. It's the same old thing. If you keep producing more, okay, there's only so many people to eat it. We could talk about the other regions of where they can buy grains at. But again, there has been really no event anywhere. Okay, what happens when we do get another event? And of course, what happens when we start to see some buyers come in? And we will. Again, this is not something new. This is not the first time this is happening. Okay, so again, I urge you to watch that. I think that's looking to set up like a great trade. It looks like gold is in a little bit of trouble here now. Now again, long term we like gold a lot, but in the short term here again, from a trading perspective, you know, it tried to get back. It was under pressure. It's down from the high was 1349.90, came all the way down. It probably is going to test that 1280 level again now, and it may even go lower now. Okay, again, on a short-term basis, based on the numbers I use, we're short gold here. Okay, so again, I want you to understand that we're going to stay short. Now, long-term, I'm long gold. So sometimes you should remember this always when I comment here. Okay, in equities, I'm always long-term long. Okay, my long-term position is always long equities. I'm hedged, so I don't care. But even if I wasn't hedged, I would still be long. Okay, because I'm using the percentages the markets go up. Gold, I'm long term, but in the short term, I can be shorted. So I can be long short in a commodity or silver, something like that. So again, the things that I always own: gold, silver, and equities. Okay, so even though I might get short bearish, you know, I might be short, you know, bearish term because one is trading, one is investing. Okay. So again, I think that, you know, gold probably has a little bit of room to work on the downside. I think we have to watch the 1280 to 1300 levels before getting too crazy. I think, as we said last Sunday, the hog market has topped temporarily here. Now again, we like hogs, but you know, any product that you get a 42% move in a few weeks, you're usually going to see a little selling. And even though we were forced out, okay, to puke, we wrote and we knew that that was probably near the top. But again, one thing you have to remember always about trading and investing is, even if you know you're right, because you never know 100%, but even if you feel you're doing the wrong thing, it always comes back down to protecting the capital. Okay, that's the real key. You got to be able to trade. Okay, but I would expect to see, we'll use July. I would expect July hogs to come back down to the low 90s. You know, after getting up over 100, okay, or over $1. And I think cattle still looks pretty solid. All right, looks like it's holding up nicely. And of course, what we call the fat cattle or live cattle still has a really good pattern to it. So again, we would look for that to continue to work its way higher. And we're seeing the cryptocurrencies, again, they don't talk about them anymore. Okay, they don't talk about the disaster. But in the meantime, they continue to creep a little higher, creep a little higher. You get occasional sell-off, they creep a little higher, creep a little higher. I think that you're going to see, and again, I think the more people recognize how lost the Fed really is, I think that brings in more interest. And I still say that some of these cryptos are going to even be used for some, you know, like gold is used for long-term storage. I think that you're going to see some of that money start to flow into some of the cryptos. I think they continue to show that they found a bottom and will continue to try to grind higher. And the truth of the matter is you would rather see a grinding higher market than a market that just goes straight up. Because usually if they go straight up, they're going to come straight back down. That happens a lot as we continue to watch. So you've got the jobs number coming this week. What's it going to be? Again, I don't think it really matters. I think jobs are getting better. Okay. I think that I still think wages are behind, but you know, obviously they'll catch up eventually. But you'll really know that the job market has returned when you start seeing much higher wages, not marginally higher, but much higher wages. But we'll see how it plays out. Again, we've got a pretty much of a mess coming on here. And because of the global economy, because of what's going on in China, and not the trade deal, but because of what's going on in China and what's going on in the euro currency, and of course the Brexit deal with Theresa May, who, you know, somebody said the other day that she's really just she's really working for the EU in disguise and kind of leading everybody on the primrose path. So we'll see how that works out. I don't know about Brexit or not. I think they'd like to be out, and I think they should be out. I think it's better for them. I think it's better for everybody, because I do believe the Euro Union, as we know it, which is when they built the single currency, I think that's going to collapse anyways. So we'll see how that all plays out. But again, I don't expect this week to see anything different than we've seen. Markets remain in consolidation, and I think that's what you'll see until it doesn't. And, you know, markets will go up until they don't. We're going to stay long until we're not. I know it's kind of goofy, but that's what we're going to do. There's no reason for me to change. We're getting closer to a number to change, but until we get it, we're not doing anything. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out of a break and come back with my commentary right after the break. Bubba's Bottom Line. Todd Bubba Horowitz. Hey, y'all. Again, I did a great webinar yesterday on hedging. If you'd like to get your copy, just send me an email at bubba@bubbatrading.com. I'll be happy to send an email to you. And of course, don't forget about my friend Joey Foreman over at Elite Promotions. If you need some promotional items, coffee mugs, pens, leather binders, whatever it is you need for your company, just give him a call. Give him a call directly at 847-702-7140. It's 847-702-7140. That's my friend Joey Foreman, Elite Promotions. Check him out. And of course, if you want to help us with our high school program, Patreon, patreon.com/Bubba Trading, patreon.com/Bubba Trading. And catch me on RFD TV Monday and Tuesday at 11 o'clock Central Time. And catch me on RTTV with on Tuesday at 4 o'clock Eastern. In the meantime, let's get back to my commentary on Bubba's Bottom Line. Welcome back. It is Bubba's Bottom Line. I am Todd Bubba Horowitz, and of course, every week I get to vent my frustrations on something. And of course, you all know, maybe you don't know, I live in Illinois. I live very close to Chicago. And of course, the big Jussie Smollett deal here. Okay. Now, isn't it nice to have the First Lady as a friend that'll call, that her old chief of staff will call the prosecutor in Chicago and get all of these charges dropped? Okay, you don't think that is going to cause any kind of problem, do you? Okay, again, this is a guy, okay, who created a fake hate crime, okay, on himself, okay, and magically, some of you should be going to jail for doing this, okay, because he, if you don't remember the story, he got himself beat up, but of course he really had himself beat up because he said this is MAGA country, okay, and of course Chicago, okay, and Illinois is the farthest from MAGA country there is. Illinois is like New York and California. They never vote right, okay? They're left down the board forever, okay? So at the end of the day, here's a guy that created a fake crime, okay, a fake hate crime, okay? Got arrested, got charged, okay, because he denied it first. Then he pleads not guilty, and magically they drop the charges out of magic. And as it turns out, the First Lady, her chief of staff, the ex-First Lady, I guess she's always the First Lady, and her chief of staff, and magically they drop the charges. And I know the Chicago police is in an uproar, okay? And I think they're sending a bill to Smollett for $130,000, the cost of the investigation. But isn't it funny when you know the right people, okay, that you get off of these ridiculous crimes, that there's no way that he's not guilty, okay? There's no way he's not guilty. Just like when President Bill Clinton met Loretta Lynch on an airplane on a tarmac, just by chance, so they could talk about their grandchildren. Okay, is that not amazing? So again, and again, this is not an isolated incident, just a one side or the other. It just happens to be at this time. But I think the bigger point is the hate crime they tried to make it out to be. And I think that is a bigger story, and the bigger story is that he got off with nothing and is now walking away. It's not on his record. He did nothing. I think that's a bunch of bull, and I hope that there's something that can be done. I don't know the law, but I hope there's something that can be done because, in my opinion, this is a travesty of justice, and it needs to be resolved. That's just as simple as that. This is Bubba's Bottom Line, Top Bubba Horowitz. Enjoy your March Madness. We got 2 games today. We like Kentucky, and we like Duke. And we'll see you back here tomorrow with Bubba's Daily Update each and every day. Thanks, everybody. Have a great weekend. Enjoy it. Bubba's Bottom Line, Top Bubba Horowitz. We'll see you later.